Welcome back to another video. Hope you guys are doing well. Had an awesome weekend. So in my last video, I mentioned that Bitcoin looked like it was starting to gear up to retest the short-term holder cost basis. And well, here we are retesting it. Bitcoin's currently sitting around 115K, successfully retesting that 113K level. But while everyone's focused, on the price, something way more important, in my opinion, is happening underneath the surface that almost nobody's talking about right now. So long-term holders are accumulating, and not just accumulating, they're accumulating at a pace we haven't seen before not entirely, but haven't seen before in a while, right? So today I'm going to show you a new metric that I just added to the website that reveals exactly how significant this means and how this accumulation phase can be, this sort of phase, consolidation phase that we've been in for quite some time, can be sort of digestible to you. So this is the long-term holder wealth concentration, and it's one of the most powerful indicators, in my opinion, for understanding Bitcoin's market structure. So let's dive into the chart. So first of all, a quick update on recent price action. So Bitcoin's currently sitting around 115K right now, and we're actively testing the short-term holder cost basis. In the last video, we noted that Bitcoin looked like it was starting to gear up for this retest, and that's pretty much what's playing out right now. We pushed up, we're testing this level, and the question is if we can hold above and use it as support on the way down perhaps, or do we get rejected and sort of go back into the range we've been in for quite some time. And it is good that we got a daily close above the short-term holder cost basis, but just because you get a daily close doesn't necessarily mean this is a breakout, right? So we got a daily close on October 13th, but we didn't get a sustained retest of this level and then bounce back up off of it as support. Instead, we drop below it and then continue down further, even farther down into this range that we've seen. Compared to October 10th, we went even lower, right? So holding above this and as support is very important. So although we did get rejected off of this level, that doesn't necessarily mean either that the price had to have dropped right below this level, right? So we talked about this in the last video. Just because you get a big drop below this level doesn't necessarily mean that it has to go down further, right? So we saw this back in June, right? We got a retest, broke below the short-term holder cost basis, couldn't hold it as support. We fell down even further, retested again, broke below it a couple times here and there, but we sort of got back above it and then retested it and then got back above it again and really held it as support, and then the bull market was on, right? So honestly, this price action in general is almost secondary to what I'm about to show you, because what's happening with long-term holders right now is way more telling than these short-term holder short-term price fluctuations. They're not as obvious in hindsight, right? So this is the long-term holder net position change in the bottom here. So this is the over the past 2 days, we've seen net position change for long-term holders grow. So that means the total amount of Bitcoin held by wallets that have been holding for 155 days or longer is growing, right? So when I say long-term holders are accumulating, I'm basically observing that more Bitcoin is maturing into the long-term holder category. Coins that were bought 155 days ago and haven't moved. And that sort of maturation of coins is outpacing any selling from other long-term holders, right? So that's an important part of the calculation, that is outpacing any selling, right? So think about it like this. So every day, Bitcoin that was bought 155 days ago becomes long-term holder Bitcoin. And right now, the rate of coins becoming long-term holder Bitcoin is faster than the rate of existing long-term holders selling or moving coins from their wallets. And that's why we call it the net position change, right? So this is significant because long-term holders are typically the smart money. These are the people who bought Bitcoin months ago, sat through the volatility, and now are sitting on profits, right? So instead of selling they're holding, right? So the data says they're holding, and more coins are basically joining this rank here. So this sort of pattern, major long-term holder accumulation during consolidation, is what we saw before major breakouts in past cycles and in this cycle. So when smart money is basically accumulating while the price chops sideways, That's typically when we see these bases get built. But I would be remiss to not point out that just because this is in absolute terms sort of increasing on any given day does not necessarily mean that the price has to shoot up, right? So when we look at it on a more macro trend basis by applying a smoothing to this, so let me just show not this, show the, yeah. So this is the long-term holder net position change and applying a 30-day exponential moving average. So by applying a smoothing to this, we can note that in prior cycles, when this starts to sort of increase, that typically means long-term holders are sort of standing guard at the bull market and are pushing for higher prices. So this is typical of what we've seen in prior Q4s as well. For example, in 2021, we saw that as the price dropped in 2021 in the summer here, long-term holders started accumulating en masse, and this ratio goes into the red here, all the way up until the market cycle top. When they start to distribute, that typically marks major distribution points when it goes below, when it transitions from accumulation to distribution, right? So it can sort of range from accumulation to distribution, but to give us a more context on this cycle, we saw that in prior breakouts, specifically 72K and 100K, we saw net distributions form during these tops, right? And then as the price goes sideways, we see it go up. Long-term holders start accumulating more. We saw this as well at 100K, and during this run up to 126K, we also saw net distributions. And currently we are seeing a net increase in long-term holders. So now I want to show a brand new metric that I just added to the website this week, alongside some other metrics on the website, as well as I released the API and some other key stuff on the chart on the website. So this is called the long-term holder wealth concentration, and basically it is measuring the percentage of total realized capital held by long-term holders. And the formula is pretty simple, but there's a lot that obviously goes in behind the scenes to actually get the data from the blockchain. So we're taking the long-term holder cost basis and dividing it by the total realized cap, and then we're multiplying it by 100 to get a percentage, right? So basically what it's asking is what percentage of Bitcoin's total invested capital is held by people who've been holding for above 155 days. Is wealth concentrated in long-term holders, or is it spread across short-term holders, right? So when the metric is sort of high and increasing above 75%, that means wealth is starting to concentrate in these long-term holders. Strong conviction holders is basically showing us that reducing selling pressure is occurring, and coins are being locked up into these stronger hands, right? So on the flip side, when it's low or it's decreasing below around 50% or 40% or so, that's typically indicative of a distribution phase. So long-term holders are starting to sell to newer participants, short-term holders. Wealth is sort of rotating from strong hands into new participants, and that usually comes with higher volatility, right? So when we look at this pattern throughout Bitcoin's history, you can see that when we start to get towards extreme lows, that typically results in the long-term holders starting to increase their holdings, right? So the wealth starts to increase, and in extreme highs, right? So the wealth starts to decrease back into short-term holders. So where we are right now, this is the interesting part. So the momentum on this indicator on a 7-day moving average is starting to flow back to the upside, meaning it's positive, right? Long-term holder wealth is increasing. That means long-term holders are gaining more share of the total realized capital. And so in prior consolidation events this cycle, we've seen that although it can shift from sort of positive to negative and back, right? So this can oscillate. Despite that, I think it's normal during these choppy periods, right? So just because it's positive on a shorter term time frame doesn't necessarily mean that we have to continue higher from this point, and vice versa if it's negative, right? So what's really interesting is if you apply a 30-day moving average, exponential moving average, which basically smooths out the noise and gives us a bit of a clearer signal. It's almost going back into the green territory. So although it's still red on a 30-day EMA basis, you can see it's starting to roll over and go back into positive territory. So what does that mean? It means more coins are converting into long-term holder status than what we're seeing in the pressure of coins moving back into short-term holder status, right? So the net flow is towards long-term holders. And typically, you do want to see this metric increase during accumulation phases when wealth is starting to concentrate higher into long-term holders during the sideways price action. That's when strong holders are accumulating from weaker hands, and that's a healthy base building behavior in my opinion. So right now, both the raw data and the smooth 30-day average are sort of telling us the same story. Long-term holders are accumulating, wealth is concentrating into stronger hands, and that typically marks a accumulation phase, not a distribution phase. So you can also see in prior cycles, such as 2021, we saw wealth starting to decrease from long-term holders into short-term holders. And you can note that literally right as the bottom formed in the summer 2020, not the actual bottom, obviously, but when we started getting those really low prices, that's typically indicative of when the momentum started shifting above, up into the right for long-term holders, and essentially started to accumulate more Bitcoin at these lower prices. And then you can also see the momentum shift down as we get into the all-time high, and you can see net outflows from long-term holders. All right, so let's connect the bigger picture here. So Bitcoin is testing the short-term holder cost basis at 113K. We're sort of still in this consolidation range. Sentiment is mixed. People are, impatient. But underneath the surface, long-term holders are accumulating the coins that were bought months ago and are staying put, and new coins are starting to join them every day instead of being distributed, right? This is still what I would expect from sort of a mid-cycle accumulation behavior phase. When price is boring, the smart money is accumulating, and that's typically when you should be paying attention, in my opinion, because accumulation phases historically don't last forever. Eventually, supply starts to get locked up, demand exceeds the available amount of coins on exchanges, and price starts to break out. And I'm not saying that has to happen. Certainly, I could be wrong about that, but we've seen this exact pattern play out in 2020 before the summer consolidation, like I noted, and before the all-time high up to 69K. We also saw it in 2016 and 2017 before the cycle started to roll over. So when we saw during 2017, we saw an increase in distributions. So concentration of long-term holders started decreasing. And then right when the cycle top was in, we saw increasing accumulation from long-term holders, right? So all in all, consolidation can last, months, weeks, but the structure underneath in the on-chain data is still healthy. And that's what matters for the bigger picture in Q4, in my opinion. And so prices, can go up or down in the short term based on news, sentiment, leverage flush outs like we've seen, whatever. But the overall market structure, who holds the coins, how long they've been held, whether they're starting to move, buying or selling, that tells you really what's happening. And these metrics sort of outline that. So Bitcoin is testing that 113K level, and it currently sits around, the short-term holder currently sits around 113K and $27. So that's typically what you want to see in bull markets, this getting broken out above, right? So historically, that's led to good things. Could we see the price dump back to these lower support levels and continue to chop around? Definitely, right? So these consolidation style events can certainly, test everyone's conviction, whether you're a bull or a bear. And that's why this sort of price action that we're seeing right now is so hard to navigate, and why it was hard back in March of 2025. We saw a lot of, distribution from short-term holders, people selling at losses, and then long-term holders starting to increase their positions, right? So we're seeing the same thing play out right now. So if you want to see any of these metrics, track these alongside other data I've shown on this channel, it's 100% free at chartinspect.com. I just added a couple of new charts on the website this week, as you can see here. So I will note that the trading view indicators that you see on my chart haven't yet been released and will only be available for pro users in the next week or so. So thanks for watching, and I'll see you in the next one. Bye.